The gold prices clearly have entered the bear market there, more than 24% down from the kind of highs that we saw in 2011, the 1900 plus kind of record highs that the gold prices had touched. We have come down quite sharply in case of gold in that sense. Last week itself, the gold prices have declined more than 6%. In last 5 sessions now, you have seen the gold prices decline nearly 9% as well. And not just the international markets, the same case in Tokyo, in Europe and in the Indian markets as well, where you have seen very sharp declines coming in. Especially for the Indian markets, the opening trades itself today have seen sharp decline. The silver prices have broken down by nearly 5%, 46,000 rupees per kg on your screens there. Same is the case with gold as well. We did see record highs of 33,000 per 10 grams in 2011. From those kind of levels, you have seen nearly 27,000 breaching as well in the spot markets today. Well, there has been the Goldman Sachs report that we all have been talking about. According to that report, they had a target of $1,450 per ounce by 2013, and that level clearly has been taken at this point in time. They also have targets of $1,270 per ounce by end of 2014, and by end of 2018, they are talking about a level of $1,200 per ounce. So in coming 4 and 5 years, it's a continuous decline expected at least by Goldman Sachs. But just to give you a clear view as well, there have been no reports of physical selling coming in for gold in the Asian markets or the global markets as well. In India, rather, you have those reports of jewelry buying and coins buying, people rushing to jewelry houses to buy into gold and silver with the kind of decline that you have seen coming in. Also, there have been reports of Merrill Lynch reportedly selling 4 million ounces of gold on COMEX in the markets, and that is what really led to that decline in the markets on Friday there. There has been more sales coming in on the computer-driven sales in futures and options market than in the physical buying, than in the physical sales. That's something really important to look out at. Also, apart from that, we have seen concerns in Cyprus, the global weak economic data. All of these are some factors that you really need to look out for in the coming few sessions.
Getting a global perspective as well, Jonathan Bharat, Chief Economist at Bharat's Bulletin, joins us right now on the phone line from Sydney. Good having you, Jonathan. Thanks for joining in. So we're just hearing that there are no reports of massive physical selling coming in gold, but reports per se have been very, very negative. Some even citing levels of $1,250 a troy ounce. What's your sense? What's really happening?
Well, essentially, since the move from about 1560, it's been a few very large orders which has triggered all the response. Really, there's no real change in the fundamentals out there. We still have massive amounts of stimulus. We still have a currency that's essentially quite weak. And on the back of that, I guess we're relatively concerned that such a move comes one day after such a large report. So if anything here, I think that you're seeing more physical buying, and I think that physical buying will support the market.
Right, but what are the targets that you foresee on gold? And, you know, would you be bold enough to take a contrarian position of buying the yellow metal at lower levels, or, you know, ride the wave till a bottom is put in place?
I think you're more than if you're confident about what's happening to $180 billion a month, then you've got to be confident that there should be some price pressures down the track. If that's the case, then when you look at gold, then gold is a store of value. So I think that if you look at some of the levels, 1420, 1422 is good support, and then obviously you go a little bit lower. But this is all about just a few very large orders that have gone through the market, and that's those liquidations that has caused. The fundamental picture still remains the same, and I think down here it represents a relatively cheap price to buy.
Jonathan, you do not think that all this talk about Cyprus having to liquidate the kind of gold that it has in its vaults could actually lead to further physical selling pressure as well in the coming weeks? It's not a certainty, but if that does happen, won't it put enough pressure and more to take gold beyond the support levels that you're talking about?
Well, it's 10 tons, and when I look at the size of the order, that's easily accommodated within the marketplace. So it's not the precedent for the selling. Is some central banks feel that it's a stopgap to funding sovereign debt issues that they have, and that's really about it. If you don't have any more sovereign debt issues, then you'll think that accumulation is the way to go. Selling gold was just a very quick way to try and stop Cyprus from going into bankruptcy. And there was one measure of several mentioned. So in my mind, it has more to do with some very large orders going through the market. Sovereign risk will always be there, and there are other means to cope with it. But at the moment, I think the market's overdone.
Leave it at that, Jonathan. Thanks so much for taking the time out and being with us on ET Now. That's, well, a view on gold. He believes, of course, there are no fundamental triggers. The fundamental story remains the same. He doesn't believe Cyprus would be a big issue, and supports at around 14.22. I think that's the level that he quoted, where you will see support for gold. 2.5% down. Globally, our markets as well. Silver has opened 5% lower. Gold is open 2.5 or 3% lower. It's not looked very good for the precious metal.